You're listening to Inside Real Estate, your source for all things mortgage and real estate related. The show that brings you all the hottest topics and insights directly from those who know it most. Now sit back and enjoy the show.
Yo! Jessica made it in today. How are you today?
Yeah.
You had a little,
Awesome.
yeah.
I'm here.
Yeah, well,
Hello. There it is.
Yeah, you're just having all kinds of problems.
Oh, man.
What's up, everyone? Paul Paslakis, Salvatore Kuzmano, Brad Weisgerber. We are Inside Real Estate. Today is a very special show. We have a friend I've known for a very long time, John Hill.
Oh, I thought you were talking about me.
No, I've known you
Damn it.
longer, actually, with Get Credit Healthy.
What's up, fellas?
Yeah, that's what you do. What are you there? You're like Chief Revenue Officer?
Yes, sir.
That's what you do?
Yep.
All right, so he brings in money. Today's also a very special day. Today's the 8-year anniversary of my wife and I getting married.
Sorry.
Oh.
No.
Yeah, 8 years. Yeah, that's a long... Where did that come from? What? Did you just do that?
8 years is a long time
We
now.
have, we have options to do that?
Did you just
That's
play?
pretty sweet.
I mean, the applause was
Not
for
the
Tiffany.
anniversary.
Yeah.
The,
Happy anniversary.
the
Yeah,
applause.
that was definitely for Tiffany.
That was
The fact-
definitely-
8 years, wow.
The fact that she's put up with me for this long has been really, really impressive.
Kinda unbelievable.
I really probably wouldn't be where I am today if it wasn't for her, to be fair. So today's...
Is she
again,
listening today?
I don't think so. She never listens. She doesn't care what I say, dude. That's where
What are you
everybody is.
doing for today?
Nothing, dude. We're going to Greece, so we decided. I mean, we're going to go to dinner. We're going to do a nice thing on Friday, but you know, it's 8 years. But it's I think it's bronze. I looked it up. You got to get something bronze traditionally.
So get her a bell.
A bell. Yeah, that's what she needs.
There we go.
Yeah, a bell.
She can sit in bed. Ding, ding, dong.
All right, guys. Jesus Christ. All right, so today I do want to talk. There's some interesting stuff happening with NAR and a lawsuit, and I really want to kind of get into that because I think it has some effects on the market if that goes through, and I think it's an interesting situation. I do want to talk to John, and John has got a really cool story. John has really clawed his way through the industry in different parts of it, and it's interesting how he's been able to get to where he is today. I think there's some extracurricular stuff that you've done to do that, but we can talk about that later. But no, John is. I've known John for a while, and I think a lot of us have. And John is always he's one of the best networkers I've ever met. Like he's always networking. He's borderline annoying, but it works, right? So we'll talk to you about that. But John, give us your story, man. Let the audience know how you got to where you are today, because Chief Revenue Officer. It sounds pretty official. Are you important?
As important as any other member of our team is. So it's
there you go.
Andy's humble.
Yeah,
It's the
humble, dude.
it's just a title.
Yeah.
It's nothing more than that, I think.
So what does Get Credit Healthy do, and why is it different from Lexington Law? Because I think what you guys do is similar, where you guys help people get credit healthy, right?
Yeah, absolutely.
So
Just answered your own question.
yeah, why? Well, how are you different?
And I think one of the biggest ways we're different is that we're not getting sued by the CFPB. So that's a big differentiator right now.
Is Lexington Law being sued by the CFPB?
Yeah, there's some things going on with that. Yeah,
Really?
Absolutely. Yeah.
Why?
Just
Why are they getting sued?
It's a little bit hard to say. I mean, again, we were talking about the NAR lawsuit and things like that. So things come about, you got to investigate things. So we'll see what happens and comes about that. But,
Got it.
The investigation will
Are they being
will take care of
investigated
it.
or sued?
Right now, there's a lawsuit. So,
Wow.
but we'll see what happens. Hopefully, they have someone good
So
representing.
credit's a funny thing, and Sal, we deal with this a lot, right? Like we'll get people and they have their credit's not great. We can actually run a scenario, and a lot of times, it's people that just have to pay off some debt. Their credit scores will go up. Some people have much deeper issues that have to be worked through. And if you don't have someone to kind of navigate you through that, we get asked,
Right.
and I don't think it's our place to actually advise them on what to do.
Definitely isn't.
No.
It definitely isn't. I mean, there's a lot of different rabbit holes that you can uncover and go down in that. So, with the Credit Repair Act and your credit agency agreements and things like that, they don't really want you performing credit repair because it's more self-serving. You need to have that expert, and you also want to make sure that you line yourself up with someone who's got the chops to do it, HUD certified and FICO certified counselors, so that they're putting them down a strategy and a path, as opposed to just getting things.
Is that your phone, dude?
It was.
It
It was,
yeah. Okay.
But yeah, you want to make sure that you're creating a consumer that's more qualified for the long term, and not just for the transaction that you're doing. You want to make sure that you're creating someone that's going to be loyal to you for a long time as well. So what credit repair does, by and large, is it is transactional. It's something that you're going to get that score up, and you're going to get that mortgage done. But what does that do for them for their next financial or that next loan that they're going to get? And a lot of times when you dispute a lot of things, they're going to go off while the dispute's happening. But when the dispute's over, they're going to come back on the credit report, and you're not fixing the problem. You're just kind of patching it up for a couple days.
So let me explain that to the audience. So just so everybody understands, when you dispute something on your credit report, while it's in dispute, it is not being factored into the algorithm or the equation of your full credit score. So what'll happen in the past is, and loan officers have done this for a long time. Hey, I need you to dispute that, right? Whatever account. Now that's changed a little bit, but that's what happened in the past. They would dispute it. It'd get basically removed from the equation. The scores would go up. You could close their mortgage, and all of a sudden you go back, and you didn't really fix the problem.
Until Fannie, Freddie, and FHA kind of got wise to it and built it into their algorithm. Hey, it will evaluate the size of the dispute usually, and then say this needs to be removed, and we need a new credit report, right? Which is where.
So that did change. So now Fannie and Freddie, when you run it through their system to get an approval, they will tell you whether or not they want that dispute removed. And so, but it's not 100%. You can still kind of get away with it.
Yeah, you never know.
Yeah, it's not 100%.
Until you run it.
So
so what we do is we partner with nonprofit credit or HUD counselors and FICO certified counselors to build a strategy around what that specific consumer's issues are. We coach and educate them and put them through a path, and it's not something that's going to happen quick. I mean, there are some times where it does get done, in 30 to 60 days, but for the most part, again, you've got to think about creating a better consumer for the long term, and you got to do what's best for that borrower and that consumer, so that they don't default on that mortgage and it doesn't come back to hurt you guys as a lending institution down the road. So one of the biggest reasons why we're starting to partner with some larger groups that due to some compliance issues we can't talk about totally today. But the reason why is because people that go through the platform that we've created are 41% less likely to default on their mortgage.
How do you get that stat?
From Fannie Mae.
Wow.
Yeah. So it's a direct stat from Fannie Mae, and it's something that, if you think about that alone, you're now creating a loyal customer, because if you have to refinance, you think about how many customers you've closed last year on purchases. You can refi those people now. If they've gone through credit repair, most likely you're going to have to go through credit repair again. We're trying to create that consumer so that when those things happen, that you can just get them done again. They're going to be loyal to you because you've helped them out.
That's interesting, because credit is, a lot of people don't understand credit. We get calls, Brad, all the time, like, hey, man.
95% of the country doesn't.
No, nobody does. And they'll be like, oh, my Credit Karma says this. And then all of a sudden we pull their credit and it says something different. It's like, why is it different? And, Credit Karma is great. I think it's a great tool to keep up on stuff, but it's not what we use.
It's a good tracking tool, notification tool, right? Hey, someone pulled your credit. Hey, you have a new account, right? Mm-hmm. Maybe we've noticed a late payment. It might alert you before, it goes 60 or 90 days late, but ultimately it's not accurate, right? It's a different scoring model, and it's really important if you don't know where you're at to really figure that out. Yeah, right.
And the best thing is to get in touch with someone like us to put you with a counselor.
So let me ask you a question. Yeah. So the biggest issue that we have is because we're on the front line, Sal and Brad, right? We pull the credit and we're like, oh, you've got a 560 credit. You have some collections or stuff on there. It's like, okay, where do we go from there, right? And then because we're the front lines, and they're like, well, I didn't have that, and I didn't have this, and then we try to help out as much as we can, but we know we have limitations on what we can and can't do for them.
Well, it's kind of like, listen, I know a bit about real estate. I could probably write up a PA, right, or a purchase agreement, but I don't know it all, and I don't want to, right? I want to say, hey, talk to Get Credit Healthy, or talk to someone else who knows exactly what's going on with that, so they can help you out the quickest. Because it's kind of like a real estate. Yeah, I think I could probably tell you what your closing costs are.
So if I'm a loan officer,
and then it might not be exactly what it is, and then someone set up the wrong way.
And the biggest thing is that as a loan officer, you're trying to help this borrower out, and you say, okay, I see these collections on there. If you do this, this, and this, it's going to boost your score. What happens if they do those 2 things or 3 things and spend $2,000-$3,000 to get that score up, and it doesn't happen. Right. Now they're looking at you as you gave me this advice. I'm now out $3,000. None of this worked. I can't get a home anymore.
Well,
I can't refinance.
That's how typical credit repair companies had operated. I mean, we've sent people over, and they're given a plan. They do the plan. It doesn't work out, and it doesn't seem like there's like as a consumer.
Well,
like
John said, it's a Band-Aid, right?
Yeah.
And ultimately, at the end of the day, like Fannie Mae's buying that profile. They're buying that consumer, right?
Right.
And those companies are basically putting lipstick on a pig.
Some of them are. I mean, you
Yeah,
don't want
not
to. You don't
always.
want to. You don't want to put.
I don't
want to
blanket it, but I'm saying, often like
They
with
just
the
have a bad
disputes and
reputation
things like
in the
that,
industry.
right?
And that's the biggest thing is it's the reputation of credit repair, and we're trying to distance ourselves from that reputation as far as possible because we're just not. I mean, we're an education and a coaching platform with technology mixed in to make sure that the loan officers stay in touch and communication.
Well, that's
with
the
them.
biggest thing, and so we work with credit repair companies every once in a while. I've worked with them in the past where they're like, okay, send us your people, we'll help them through it, we'll send them back to you when they're good and healthy, and then you guys can do something for them. Well, there's not a lot of visibility. We don't know what's going on. We're just completely detached from it. They get their credit scores up, or they do some things, and we never hear from them. And the whole process of trying to get somebody, and we're trying to do the right thing, right? But
Yeah.
it
And
doesn't
And you're
happen
hoping
all-
that it comes back, right?
Hope.
Although
hope is not a
but
plan.
I do
It's
believe
not a strategy.
personally that at some point there has to be some type of change in the way that credit is scored. I mean, it's absolutely crazy to me
They've
that
made changes, but
someone
it's not
who
It's-
has had good credit, never a late payment for 30 years, misses one payment on accident, right?
40
for a-
points, 50 points,
For a
100
fucking
points.
$40 Macy's card, and now their credit's trashed,
Yeah.
right? And
Well,
it takes
it's
a
not
year
like-
to get back, and it's like, hey, you're gonna pay thousands and thousands of dollars more because of this when they're getting a mortgage, let's say.
It's not even that though. I think there's a fundamental change that needs to happen with visibility. So like you may or may not have missed a payment on your Macy's card, but they might have reported that you
They
did.
just ding you with it.
You don't even know.
Yeah.
Right.
I'll give you an
Right.
example.
Well,
Your score could be
I get
500.
that.
And you have no idea.
But that's an issue of the
Right?
merchant,
And you-
right? But I guess people need more access to their credit.
Yeah.
How
Yeah.
crazy is it? You don't know your credit scores. You have to have someone pull it.
Right. No, and there's some really cool tools in the industry that are coming out to help with that stuff too.
But they're all different models too. Like it is
crazy
crazy
you
that
can't
you
even know
need
your
to
own
have
credit score.
credit
You
to
have
do
to-
anything. You have to
Yeah.
have credit to rent an apartment. You have to have credit to buy a house. You have to
Credit
credit to get
Karma
a
is
car.
trying to do that,
You have to
though.
have credit
Yeah, I don't
to do
think
anything
I
in
think
life.
a lot of people, especially people who pay for everything with cash, right?
Yeah.
We always get that.
Yeah.
I've always bought everything cash. I've always bought my cars cash. I've always
and they have
bought
no
what
credit
I had, and
profile,
that's
right?
great. I mean, that's awesome.
No
but
credit
then
is
it's like,
bad-
hey, I
is-
want to get a mortgage.
Yeah, you can't.
Shit. Go open a secure credit
And that's
card.
the other thing that our platform will help do. Again, building a strategy around somebody who's credit invisible, someone that again, that guy that's paid cash, or that person, that young guy that's never done anything, right?
Here's my
Right.
biggest problem with credit right now. Here's my biggest issue with it is these credit bureaus are for-profit companies.
Yeah.
They are
A
for-profit
lot of people
companies.
don't even know that.
So they're not like agnostic companies where they're not. They're looking to make revenue, and these credit bureaus actually sell information to companies like banks and other places. Like when you get a thing in the mail that says you're pre-qualified, that's because they bought
Dude,
that.
From the credit
Imagine how
bureaus.
much money they're making.
Making
'Cause I
tons
have
of
to-
money.
I mean,
Trigger leads.
think of all the companies pulling credit.
So think
and
about
how
this.
much those bills are monthly.
They sell your information. You go to get your mortgage pulled, right? You go to get a mortgage. Your credit gets pulled. That credit bureau now has the information that you had a credit company pull your credit. They sell that information to other mortgage companies.
Yeah. I got a call from Quicken the other
That's
day.
asinine.
I got a call from Quicken the other day, but I never talked to them. Did you guys tell them that I wanted to get a
Right,
yeah.
mortgage?
Right.
To
No.
reel it to
Real
reel
sneaky,
it back
dude.
a little bit too. I mean, how dangerous can credit be to someone too, right? Like someone who's never you can basically get a credit card or something like that, or maybe you're on
16
your
years old,
parents
18
when
years
you're
old.
16, 17, right? And by the time you're 18, 20, you move out and you have a 730, 740 credit score. You walk into you're looking at a car or something online, or you want to buy something. Hey, I have like $7,000 of credit available, and you make 21 grand a year.
Yeah.
Right. You
go
rack
buy
it up and
And
go
there's
on a
no-
vacation, and there's like, yeah.
Nobody teaches. I
didn't
I
get
had
to-
home economics when I was in high school way back in the day, but they
You
didn't
took
teach
home
me how
economics
to.
for 4 years, probably.
I
Home
did. No, just one. But I
economics.
would have taken it for
Of
4 if I
course you
could
would
have. But no, I mean, if you think about, how you're right. I mean, it's one of the biggest things
It's so
that you
easy to
have.
get into what my dad calls the credit trap.
Yeah.
And I did it.
Yeah.
And
I did it.
I was like, hell yeah, I made 10 grand this month.
When I got
Went,
married,
Racked
guys,
up a credit card, and it took me 2 years.
when
to
I
pay
got
off.
married, my credit score was 580 because of the
8
things
years
I-
ago.
Yes, when I literally it was 580, and my wife shouldn't have married me just based on that. So when we got married,
My wife's the same for that, too.
We have 580, right? You want to know how I got my credit scores up? I put myself as an authorized user on all her cards, got all her past accounts to be used on mine. Things fell off, and now I've got like a 740, right? or there's ways to do it. And back then, I knew how the tricks to like get my scores up, which all have kind of gone away. You can't authorized user doesn't work the same way.
Yeah, it
but
does.
Maybe it does. I don't know. My point is,
It doesn't solve the problem.
it doesn't.
No, but
yeah.
it does
was me, by
give
the
you
way.
all the history of that account
Yeah.
by adding it.
There, listen. The bottom line is there's not enough education around credit as a young adult, because when I was young, I had a $500 credit card and I didn't pay it
And
back.
there's not enough education around debt.
Yeah,
Right.
That's the
I
truth.
think one
There's
thing
not enough
that people
education
should
about
do,
real life.
Well, I think one thing
Right.
that these companies should do is raise the minimum payment amount, which would suck, right? It's like, shit, I got
That's where they
$5,000
make
on
their
a
money,
credit
though.
card, right? I get it, right? But they could even heavily put interest into it,
Yeah.
because ultimately, okay, I can afford $5,000 at $30 a month or $50 a month,
Right.
And then I constantly see it. You pull a
Right.
credit report and it's like
Dude, you can
$10,000
finance-
limit,
you can finance everything now.
$9,990 on this card, right?
Yeah.
And they just make
$70
the
payment.
$50 payment or whatever
Because
every month.
you can finance clothes.
Yes,
from
that's what I'm saying.
Zulily.
What is it
and-
called?
and-
What is that thing called? Whatever it is. There's when you go
Well,
to buy
it's-
something, it'll say, "Do you want
Hey,
to?"
we'll give you $100 too.
Yeah.
Oh yeah,
Open up a Nordstrom card.
exactly. Yeah, I mean
For your
everybody.
$200 pair of shoes.
No matter where you're at,
And
I mean
it's
people
$5,000
are
and
always
you-
throwing it down your face. And as as somebody, 18 to
It's super
24 years
lucrative.
old,
Yeah.
it is. It's the credit trap. But it's like, hey, I don't have to spend 200.
Buy
bucks
now,
on
pay
this
later.
thing.
Buy
I'm
now,
just
pay
gonna do
later.
it this way. And next thing you know,
And that's
you're
the only reason people are in trouble.
You're 26 years old. You've got $200,000 in student debt, and you've got $20,000 in credit card debt, and then you're
You
done.
can walk in
Did
and
you
go
look at
lease
my
a
credit?
car. They ask for no income verification, anything, right?
Right.
They pull your credit score, 680.
Yeah, you get a car.
Let's roll, right?
You get a car. You
Your,
get a
score, your
car.
payment's
The first
$30
time-
higher. You
the
cool
first
with
Bro,
that?
time
you could have a repo on your credit and get a car the next day. For sure.
The first time I bought a car, it was totally new to me, and I came from mortgages, so I was already in the mortgage industry, right?
Yeah.
And I went to go buy a car, and I had a folder of pay stubs, like I was gonna get a mortgage. It's like, how much do you make? And I was like, blah, blah, blah. Like, all right, we're gonna do a softball on your credit. All right, you're good. Here's the keys. I was like, what?
Yeah,
I could have told you I made $20,000 a month, and you would have asked any
Which
questions.
is dangerous.
I
That's how you
financed
used to
a-
be able to get a
dude,
loan back in 2001,
I financed a car
2002.
last week, an old car. I went online, plugged in my info, right, and told them what I make, told them what I had in the bank, and an hour later, the wire was in my account. No verification, nothing. I mean, yeah, they checked my credit, which is okay, but, I mean, I could have put anything I wanted on there. It came in. I don't know if they have some tools in the background or whatnot, but that money was in my account, and I said it's for a car. It is. However,
You could use it for
it could have been anything.
Anything.
I could have went and
Nah,
just went on a vacation.
You know, that part-
and have no collateral. They don't collateralize it.
I am a little
And
worried
it's a
about
4% interest rate.
I'm a little worried about
which is
that.
wild.
Can you give me that information?
Yeah.
Yeah, it's
Our
badass.
access
I can give it to you too. It's crazy.
Honestly, it was great.
Our access to capital in today's world is very, very, very available. Capital is everywhere,
And you wonder,
which is funny because in
Did we learn?
2009,
Makes me wish I took
2009, you couldn't get any loans. There was no capital anywhere.
why haven't we learned from 2008, 2009?
Because
We're
there's
making
money
it
in it. There's
easier.
profit.
Exactly.
It's
exactly.
profits.
In 3 or 4 years, we're gonna recreate we're gonna
It's not
recreate
going to be the
history
same.
again.
It won't be the same. But we will. We are overextended as a nation.
Starting to.
Well, our whole nation's built on debt, bro. That's how we
Everything.
work.
And,
Look at our
and you know
federal
what?
deficit. Jesus.
To a good friend of mine down in Texas, he's got his mortgage company called Debt Does Deals, and that's the truth.
Triple
I mean,
D.
you cannot buy a mortgage if you don't have
When
debt.
people used to
Well,
ask me
you're
what I do,
creating debt.
wait, when people used to ask me what I do, you know what I used to say?
What?
I sell debt.
That's it.
It's
Yeah.
basically what we do.
That's
Yeah.
what you do.
I mean, you gotta do it
Omega
consciously.
lending, it doesn't matter what your name is.
We
I
sell
mean-
money at a cost,
Exactly.
No.
right? And
Yeah.
the thing is you never learn about it, right, until you're already inside it, in the
Until it's
circle
too
of
late.
death, right?
Yeah.
So what you
Circle
need to
of
do, or what I think this country needs to do, because now, past like I don't know the 60s, 50s, like I don't know exactly how it worked back then, but it's pretty constant that like, hey, you're going to borrow money. You're not going to like buy your house cash likely. So
It's
I feel like at a
assumed.
young age, like people need to learn like,
what it means to borrow money.
yeah, DTIs,
100%.
things like that.
Like,
Like, yeah.
coming out of high school, they're going to get student loans. They don't understand what
Hey,
student loans. That's why student loan is such
anybody
a
that's
big problem
listening,
right now.
that's a teacher or like has kids or whatever, I will gladly come and talk to your class about debt.
Absolutely.
Like high
implement
school-
it into the math
Paul's
curriculum.
probably not the best idea
You know?
to do that.
I'll do it.
I should not be
100%. I
talking
mean,
to kids.
so I mean, we get
I mean,
credit
they
healthy.
teach like knitting.
Exactly. I mean, knitting
Fucking
and,
crazy.
and yeah.
like,
I mean, there's a good point.
You know?
Yeah, our school system. Listen, honestly, this should be taught in schools. It should be taught in high school. Really, is where
It should be taught senior year in high school. It should be a mandatory class where, I mean, because you have like,
Let's get you ready for life, brother.
American history. You've got certain, required curriculum that you have to take as a senior.
Should be
should be finance,
like life finance.
home
Personal finance.
personal finance.
Personal finance.
Yeah. How to? I mean, because I can tell
A
you,
personal finance class would
how
be
do you-
very valuable for people to be like,
you don't need to
Okay.
balance a checkbook today because everything is
I was gonna say,
online,
that
right?
was-
But you actually need to know how much money you have before you swipe a card. And
you want the reality of what personal
Yeah.
finance
and
is.
what can
Remember-
it do to you?
Who needs to know how to balance a check? When's the last time you balanced a checkbook?
I've never.
Not-
My wife used to balance it to the penny, and if it wasn't right, she'd go back through and make sure where she found it. I mean, she's an accountant, so I mean, she's got that gene in her. But I've never.
Well,
I'm like, all right, I got
Yeah,
this money in there.
when you get into the
There's been
credit
more.
trap too, you figure out how to
been more.
triangulate it, right?
yeah.
All right, rack up this credit card, go take out an interest-free credit card,
Right.
rack
Move-
that
move
other
it
one
over
back
here.
up.
I'm doing
That
that
one's
right now.
interest-free for 18 months. You do this, you do that. I mean, I've done it a lot,
Balance transfer.
and man, does it suck.
Yeah.
All of a sudden, you got 40 G's of credit card debt.
Yeah, and you're
Right?
paying $8,000 a month or $800 a month on all those things.
You're paying $3,000 a month on it. It
Yeah.
still take you a year to pay off.
Yeah, so
Yeah.
what we're going to do at Get Credit Healthy, I mean, I've only, I joined this company about 2.5 months ago, and the outlook for 2020 is we're going to start putting some of those programs together. We're going to work with, we're going to start off with a veteran program to where, and the idea behind it would be is
Well,
to
veterans
get,
need help too. Man.
Yeah,
They
I mean,
come back and they're all out of sorts.
and they're coming back and they're
Yeah,
all out of source,
they're all
right?
out of sorts.
So, the program and the idea behind it, what we're going to be doing, and I don't want to give too much away, but is to get in front of that and get to them and get them enrolled in a program so that they can learn about what's going to happen, what
That's
credit
awesome.
is, so that when they come back, VA loans are, one of the things that I think that we need to be talking about a lot more in the mortgage and real estate industry, and understanding them a little bit better so that we can provide and make sure that we secure and
VA loans are under attack on a lot of levels. Real estate agents don't like getting a VA deal.
And that's-
they turn
that's
them
too
away.
bad.
It happens all the time.
They're one of the greatest loans out there.
That
It's
is
the
too
best.
bad, and
It is the best.
they're one of the
It
greatest
is.
loans for the greatest people in our
Correct.
country, and you're going to discriminate against that and
Right.
that person
And it
by
happens a lot.
and that's to me that is absolutely it's crazy.
Yeah.
So what we want to do is get in front of that. So when they come back, they're ready to go. They understand it. They get what they're going to do. But it's not just for that loan. It's for the rest. It's for their life, right?
It sounds
It's
to me that like Credit Healthy, the company that you're with now, actually is conscious about doing the right thing. Obviously, you're for profit. Let's not forget it. All this stuff is self-serving on some level, but at the same time, you can do the right thing and be profitable.
So our technology piece is the profitable piece, right? It's not about, because we use nonprofits for the coaching and the education. So that's that. I want to make sure that, it's the technology and the platform that we have. That's where we make our money. But on the coaching and education side, we specifically partner with nonprofit agencies to do that.
So if I'm a loan officer today and I want to use Get Credit Healthy, because can anybody sign up? How does that work?
So we're, it's more of a enterprise solution.
got
So, we'll do it for a small broker, small lending company. We're going to be in the Arrive platform.
Okay.
Hopefully August 15th. So anybody listening on that is getting Arrive or that it's on Arrive, hopefully August 15th, you'll see us and you'll see the launch and everything. But just go to the website, getcredithealthy.com, and
see if it
we'll
works out good.
And we'll do an assessment for you. And if it works, it works.
You know what's funny about John? John used to trot through our office. He used to do title for us.
Oh my god!
Remember that?
I hated you.
Oh, John would
You
come
love
in.
me.
I
taught
hated
you.
you with a passion.
John would come in, and we'd be like, "Fuck, man."
He
John's
would bring
here.
the best donuts, though.
Yeah,
He would for sure. He would.
So John was in title for a
And
long
they
for a
kicked
while.
ass at title.
Yeah.
And you did a great job. You did a
Make
great
sure
job.
shit got done.
But what I always appreciated about you is no matter how annoyed we were that you were there, on some level you added value when you came. And that was something that I always walked away and I was like, John's all right. It's just super annoying. I didn't want to deal with it because I was in my world, right? But you always added value, and then you'd leave. And so it was good.
Nobody wants to deal with the title guy.
Nobody wants to deal with the
Yeah.
title guy.
We're-
No, it's
we're-
horrible. Then you went over, and then from there, you transitioned and you went to
Into tech at Social Survey.
You went to Social Survey, which is a great company, does a
Yeah.
lot of good stuff. Then from there, I mean, you just hopped over. Then you went over to Homebird, was it?
Yeah, so I took over the operation of CEO at Homebird and Ash Holdings, really.
Yeah.
And that
Which
was
is a great company as well.
It's a great company. Awesome opportunity. I mean, I never thought.
John's
that
an opportunist, though. He's
Yeah.
John's
No,
I
I never thought that I'd have an opportunity or a chance to be the CEO of anything.
yeah. I know.
And
Neither did I.
Yeah, not
Nobody
too many
did.
people did.
Your
But
wife,
for
your
someone
friends,
for
family.
someone to think of me in that light and to give me that opportunity, that was great. But at the end of the day, I'm a sales guy.
Yeah,
and I'm a relationship guy.
I want to talk to you about that because a lot of people, because one thing that you do excel at is your ability to network.
Yeah.
You do a really good job networking, and you're always got your, you're getting, you're setting people up. You do a really good job, and something I've learned from you actually is that you take your network, and you help your network help each other.
Yeah.
Which is really, really what people should do. Your network isn't self-serving all the time. The beauty of creating a network and having people around you is being able to add value to that network.
For sure.
So what you've always done, even today, like you're like, Paul, I've got this guy, I've got this person. You should talk to this guy. You should talk, and that person, you're saying you should talk to Paul. And so,
Well, it's quite evident in today's age, right? Like the most successful things, the most successful people are people who network, right?
Yeah.
Like look at Facebook.
yeah,
It's a network, and that's how it started, and that's
Yeah.
how it blew up.
LinkedIn.
In a matter of
LinkedIn.
Yeah, LinkedIn, Google is to a degree. I mean, it's insane. And if you model yourself kind of after that, right? Like, how can I get in front of the most people, talk to the most people, tell them what I do or whatever? You're going to end up.
If you can create a robust network, if you can create it, a lot of people just want to go work somewhere and just be anonymous and not have it's difficult to build a network of good people around you. But once you build a network and you've got really good people around you in that network and you add value to that network, you will always be okay because you will always have support within that network, right?
Yeah.
And I think it is understated for real estate agents, loan officers, everybody out there that just wants to do leads, sit in their office and call 100 leads a day and don't get out there and not get to know people. Those people, when the moment the leads are turned off, they have no more business.
That's what happened in 2008. That's what you're looking at today.
Right.
I mean, I've known from back in the title days, and I started in this industry in 2001. So I came in a refi boom, and then rates went up a little bit, and then we had the crash. But after the crash, I mean, there was a lot of great loan officers that I know and still friends with today that, they got into that trap of let's call all the easy refis and let's do all of the, what are those things?
It was lucrative, man.
Even right now.
Even right now.
People are on.
I mean, it's
people
dialing
are-
for dollars, but you
Right.
forget how to sell a mortgage because you're just selling.
It's not even selling a
Yeah,
mortgage.
you
it's
know
selling
how to sell
yourself.
the mortgage. You don't know.
Yeah, it's an easy
You don't know
thing.
how to take care of the
you
hand
know?
that fed you, right?
and
That was feeding you. That now you're like, listen, I got 15 refis. I don't care about your
Yeah,
100K
that's what
purchase.
happens.
Right.
Right now, loan officers, all of a sudden, the refis start booming again, and real estate agents don't get called.
Yeah.
And I always tell LOs that this is the best time to reach out and create your network with real estate agents because look. If you have a network of people that you're working with that refer business back and forth, you will have longevity in the industry.
Yeah.
You will have a much healthier income base for longer haul. You can make a lot more if you just focus on refis right now, but if you don't build that network...
Well, do you want a job or do you want a career?
Right.
I mean, that's the
right?
thing is that I mean, purchases are a 401k program for mortgage lenders, right? I mean, if you want to be in business and you want to stay and you want longevity, you have to have a purchase plan.
Yeah.
You have to have a strategy to build around realtors, and whether you're retail, local,
It's
like
referral
you
partners.
guys,
That's
right?
You just have to think like,
or you're
how
or you're
will
a
I be doing this in 5 years? Or
Yeah.
how will I be doing this if something happens? And
But moving away from a purchase strategy in a refi market is the death of. I mean, you take a look at over the last year, right? A lot of the consumer direct shops in the country have
rates went up,
rates went up. They were hurting and they were trying to adapt to the purchase market on the run and on the fly, and it takes too long. I mean, it's a 3 to 6 month
and another
incubation
thing,
period,
too-
and when you're buying leads. You have to put all that money up front for 3 to 6 months before you start returning that. But you have to make it focus, and you have to have a plan to do that.
The same
Yeah.
thing goes for real estate agents too, right?
Same
Let's say
thing.
you
Same
had
thing.
a pretty cushy salary job. You're kind of over it. You got a little bit of money saved up. You can go out right now, plug into Zillow, right? Let's say
Yeah.
you're a good salesman at another job, right? Probably get out there and probably do pretty well.
Close 3-4 loans a month right off Zillow.
For sure.
Close 3-4
I mean,
real estate transactions.
transactions.
Yeah.
Sorry.
But see, that's the beauty of Zillow.
And get
though.
into it. And if you don't learn how to, now that's a good thing, right? You can go out
To
there,
get-
but
it'll
you
get
need
you
to
going.
learn how to turn those leads into relationships.
Oh,
right?
and that's
Yeah.
that's beautiful right
You
there
could-
because it's your voice of the customer. Zillow, I mean, if you're a consumer direct brand, or you're a realtor, or the voice of your customer and the stuff that you've done good to people and for people is your best ROI. If you put all of that customer experience that you've provided into each and every borrower and get that out into the community through LinkedIn, through all the social media outlets, you're going to build your brand.
Well, yeah,
and your
I
brand
think
is the most important thing that you have.
People need to realize, whether it's mortgage, real estate, a lead is a lead until they pick up.
Yeah.
And then it becomes a sphere of influence, because now you've already known this person and talked to this person. And
Right.
especially after you close it, they're in your network.
They're in your network, and if you've done good,
And then you have to figure out, like, hey, listen, like,
But most people are transactional, man. That's
no
the
doubt.
problem.
I'm just saying, and
the
that's why it's a high turnover business, and that's
Yeah.
why a lot of people don't make it, and that's why.
So the leaders of these companies need to put a strategy in place for them, because because again, I mean, if your loan officers are transactional, the company doesn't want to be transactional. They want that
Some
repeat
do.
referral business,
Some
right?
don't care.
So you need to automate that customer experience, the voice of customer process.
Here's
and
my
get
fear with
those-
automation, though. Automation has to still be human, and it's difficult. It's getting much better to be able to automate the human experience. My fear is when you have someone that is actually a client now, too much automation feels sterile, and nobody wants to
Listen,
deal
it
with
takes
that.
a special cog in that wheel to be able to build relationships, and those are the people
100%.
who rise up and end up probably don't even writing
Right.
loans.
Technology will never replace human relationships, right? And human interaction. But what I'm saying is that
It's
if
got to
you're,
accentuate it.
if you're closing 40 deals a month, right, you should be sending out a customer service survey to every single person that you have. And then when you get that feedback back, you need to be putting that out on every social media post, on your
This
website.
is very important.
Everything.
So in today's world, we talked about this earlier. The first thing people look at is the star rating,
yeah.
right? Who are these guys? Let me look at their star rating. Are they rated well? It's very, very important. And not having a focus. A lot of companies, I'll look at like a Lowe's like Zillow profile, zero ratings. Or then you go to their Google page and they've got one Google review.
And you
It's
just
funny
lost
'cause
that
some
deal.
of them kill it too.
They kill it. And
Yeah.
they don't see the value of it because it takes some work. It takes work to get people to, because nobody, listen, when you talk to a client, some of them will automatically just go and give you a review. Very few will. Because I've left a few reviews in my life.
Yeah.
The hardest thing to do is follow up with someone after you got paid.
Yeah.
You know,
That's why you automate it. Because if you automate it, it doesn't
well,
matter
you can
if it was
automate
good
it,
or
but I
bad.
think the people who are going to be long-term successful are the ones who put a strategy around it. Whether it is automated, whether it is
Whatever the strategy
a
is, there
campaign,
has to be
whether
a
it's
strategy.
even having people, hey, you closed a loan with Sal 6 months ago. We just wanted to
How's
follow
your
up.
service?
Say
It could be anything.
right?
You've got to have
Something.
a system by which you capture because if you do a good job, everybody should know about it.
But automating that customer satisfaction experience survey type of a thing is the easiest thing for you guys to put in place. And the reason why is because
Well,
you want to get
we have automated.
Yeah, you want to get that information right away. You want to get that out on social media.
Correct.
But then if you do have detractors and you do have those people that aren't
wanna know what's
aren't happy,
wrong.
You want to know what's wrong, but you want to attack that right away so that you can flip them and understand so you can get better.
Yes.
Right? But I mean,
The question for me isn't. It's more the ones that are upset. I want to know why.
Right.
Because I need to get better at that. I know the ones we did well, but I need everybody else to know that. But the ones that we messed up on, I want to know why and I want to fix it. So I want to get into these topics though because we're going to run out of time. There's actually a few things I want to talk about. So first thing is NAR is being sued by a lot of lawyers, and what's under attack right now is how real estate
What's
agents.
NAR?
The National Association of Realtors.
Thank you.
So realtors in general are being sued right now, class action lawsuit, and we've talked about this, but it's kind of heating up because 10 more law firms just jumped on board, and the DOJ's on board. So there's a lot going on there. They're basically attacking the way that real estate agents get paid. Now, the reason this is poignant, in my opinion, is because this happened to the loan officer industry, right? Now, there was a crash that caused that, but what happened is people looked at us as the linchpins because we got paid on mortgages and how we were getting paid. So they revamped the whole thing. And who won in that were the big banks because brokers and smaller shops had to abide by these rules and banks didn't. And so banks kind of got a leg up in that period of time, and it took a long time for us in our smaller shop world
Yeah.
to
How have tides turned?
They have turned. Yeah, they
Big
have
time.
turned because we've learned how to navigate the laws. And actually, we got stronger because we've been batting with a weight on our bat, right? So it's a little bit different. But what's happening right now is they're being sued because they're saying that the buyer's agent is colluding to get more commissions, and their commission structure is unfair to the seller because the seller has to pay that 3%. And a few other things, right? Am I wrong on that?
Well, I mean, yeah, and it also said that the selling agent or the listing agent does more than the buyer's agent. I mean,
they said the listing agent should get paid more because they do more.
Yeah,
And that's not really true. The whole thing's frivolous, in my opinion. And I'm not.
It's specific to each transaction. Sometimes the listing agent does do a hell of a lot more than the buyer's agent.
And the buyer's agents, though, they hustle, especially now
Yeah.
with it being
But
a
listen,
buyer's
unless-
market.
But would
or
you rather
seller's
be a
market.
listing agent or a buyer's agent? You personally,
Listing.
Yeah.
listing?
all day.
Of course, I'd
long.
rather
Just
be
so
a
the audience
listing
understands,
agent.
when you're a listing agent,
But why is that?
because you put your sign
Because
on
you do less work.
you do less work.
I think that'd be more exciting to be a buyer's agent. I think that sellers are probably a pain in the ass. when
Until
you're
you get a
listing
call at
agent.
7
But-
o'clock at night to go see a house in Belleville.
Yeah, out on that.
or your listing agent,
Or you've
That's what
looked
I'm
at
saying.
31
Other than
houses.
having to go show homes, right? Like if I had a team that just showed homes, hey,
You can
Go-
set it up.
Yeah.
Don't get me wrong. The point is, here's the point: when you get judiciary systems in place, and to think about a process or business that they don't understand, weird things pop up. But
So many current references in
Yeah.
Congress right now that I could go to.
I'm just saying,
I mean, it's
when
unreal.
the government or the judiciary system tries to implement things into businesses that they don't understand, it fucks everything up.
Yeah,
It fucks everything up. Like
healthcare.
Like look at the loan estimate for a loan right now today. A loan estimate that was supposed to be easier for
Oh,
someone to
man.
understand. If you look at a loan estimate today, I barely understand it, and I look at them
and
every
just
day.
like everything else, right? There's a workaround.
And do you know
Honestly,
that
like even with like the LO comp rule and things like that, there's workarounds.
Yeah.
As a correspondent lender, we can get paid for a higher rate.
Mhm.
We really
yeah,
can.
yeah.
Right? We
could.
can make
Well, the
more. Hey,
company
put
can.
in the owner's name
The
or
company
whatever,
can.
right?
Yeah, the
Yeah.
company can.
Typically, it's because we're taking them short,
Yeah.
right? Like, hey, we can't pay you on this, so we got to take it short and put it in our name. Otherwise, But in reality, like, there's a workaround for that. Hey,
think
we
we've
don't
ever
want
done
to.
that.
We've never done that.
Yeah. I
The
don't know.
LO comp is being reviewed, and that's going to be changing as well. And there's a lot of things that
Again?
are changing. Yeah, yeah.
Everything's
Oh, yeah.
changing. Everybody's
should-
There's a
yeah.
big initiative with Congress and the NBA, and
Here's
everybody
the
that-
problem with
that.
this lawsuit that bothers me, and this is devoid of the actual like the realtors or any of that. The people that are laying in wait, loving this wholeheartedly, are like Zillow, Open Door, Redfin. These companies that are buying houses off the market, they
Well, yeah.
have the same amount of fees. They're just structured differently, so they're not even being mentioned in this lawsuit. So
course
they're,
not.
they're sitting back. They're like, all right, let's see what happens.
So part of me thinks,
hope.
because
Yeah.
when we first started talking about this, I was like, man, who really gives that? Like, who really cares that much to like start this, right? Like, who's really
I
like,
was Zillow-
screw this agent? Like, I'm gonna start a class action.
Some
but now
guy
that you
in
say
Minnesota.
that, all these
There's
big
a guy in
companies,
Minnesota.
all these
Some
big companies
guy
that have
in
been getting into
Minnesota.
this, they gotta have a hand in getting this. There's got to be a motivation.
I don't know. I
there
think
because-
something moved the rock, and now they're just sitting back, and this thing is just taking off. Because there was one guy that was very unhappy with the sale of his
people
house.
are too happy, right? And if you feel wrong,
as our
you're
lawyer
gonna-
said, yeah, of course they can sue you.
Yeah,
If
well,
anyone can
listen,
sue anything.
as a shift comes into play where values either flatten out or even go down a little bit, commissions will be a big thing.
Well, I'm
right?
gonna tell you right now-
6% commission is like,
I
hey,
mean,
we're
commissions were
underwater.
already
Yeah.
under attack.
We're
They-
underwater because the average amount that someone puts down is probably like 5%, right?
Yeah.
Well, if you bought a house and you put 5% down, you're
underwater
even.
immediately.
You're
Yeah,
even.
You're even immediately.
Yeah.
You lose your down payment.
Yep.
You lose that equity. You got to pay 6% in commissions. I mean,
The
it's
commission
like
structure was
6-7%
already under
to
attack.
sell a house.
It was
So-
already under attack. Like people were already looking at it like this is not working. There's already like people trying to figure out how to like. But now you add this, and now you've got companies like these other big conglomerates. My biggest fear is that real estate agents now will end up just working for Zillow.
But if you think about it, so
Not gonna happen.
on a house,
I doubt it, but I'm just saying.
I'm
This-
okay with putting 5% down and starting that loan even, right? I'm breaking even. Think about when you buy a car, or you walk off the lot, you're way underwater.
listen, you either
immediately
put
as
it
soon as
down-
you put your keys in the car.
Here's the
we're-
thing: you
we're a
either
real
put it
estate
out,
show.
you
But
Well, you got to
Yeah.
buy a Wrangler.
you either put it down
Compare
up
the
front,
different
or
finance
when you
industries.
buy a car and don't pay it off, which is what a lot of people do. They buy a car, have it 2
Most
years.
people don't pay their house off.
Sure, but you either put it down up front or you put it down later. If you're underwater on your car, you're going to pay it in the end, or you put it down up front and you're not underwater. especially
Same
on
with
a
the house, though.
depreciating asset.
Yeah.
A house can be an appreciating asset where, hey, whatever, we still walk away with an extra 30 Gs.
Yeah.
Well, I mean, we're talking about appreciation, and I believe it was May, the average house appreciated 0.9%. So over the year, it's almost 11%, 10.8%. And they've actually revised the appreciation up from 3.6% for the year to 5.9% for the year.
Yeah, but dude, that's slowing down.
Let's talk about projections.
It's not. It's actually
This
speeding
is
up.
crazy.
I'll
This
talk
is
about it.
crazy. Talk about appreciation. I did a refi for someone almost 2 years ago exactly. Just over a year and a half ago. I'm doing the refi for them again right now. A year and a half later, almost 2 years. Their house appreciated $180,000.
Well, that house, because I know which one you're talking about.
Yeah, you know who I'm talking about because I called you on it.
But what can also happen too is you buy a house in an existing area where the highest sale is $400,000 or $480,000. A new development comes along.
Yeah, it was a new
and they're
development.
building new monsters
I mean, that's
that are
atypical.
$500,000.
You can't use that as an example.
Well, no,
It still blows my
well,
mind.
look at Royal Oak, even, right? So
I never thought my house would be worth
you
what
buy
it is today.
Right, and your neighbors never thought that either, right?
Never.
They bought their house for $80,000. It's a $220,000 house.
Right.
Yeah, I
Right?
mean, I bought
But
my house
here's-
for pretty darn good.
And mind you, there was that slowdown, but they may even bought it way before then.
Yeah.
But now with all the development, the shortage of inventory, the people who are now building and redoing houses, right? Areas just in general, right? The appreciation is also because of the added improvements that have been put into houses. Because it's like, hey, we're not going to move. We're going to build on. We're going to do an addition. We're going to do that. And all of a sudden, you have all these different
Yeah,
comps.
but guys, relax because the slowdown is coming. I mean, it's evident
Sure.
that it's coming. Not only that, like Fannie and Freddie just implemented more restrictions on low down
which is
payments.
crazy.
Yeah, they're restricting low down payments where before you could use a calculation at 100%. Now it's at 80%. We can get into it, but it doesn't matter. What basically
It's getting tighter.
Less people will be able to put 3% down on a mortgage than they had before. Also, on top of that, DTI restrictions or debt-to-income restrictions are getting tighter. Fannie and Freddie, in my opinion, they're seeing that the market's
they're prepping.
It's softening, and they're getting tighter because they want better paper.
Is that a bad thing, though?
or is
No,
it a
it's
No, it's a
exactly
great
what
thing.
should happen.
Or
But
is
it's
it
the
a rubber
opposite-
band? Because
it's the
now they're
opposite of
seeing-
what we thought was
They
gonna be
pulled
coming.
back so far, 3% down, 50 DTI on a house where
Yeah.
someone has
Yeah.
$15 more than what's needed to close.
Yeah, they're getting. Yeah.
Are they now seeing that rubber band come back and it's not as clean as they thought?
Well,
right?
I think that I mean, if you think
Are
about
they having foreclosures? I don't even know the
you
data.
take a look at
foreclosure
what's
numbers are
happened.
really
Yeah,
low.
yeah. If you take a look at how the mortgage programs and products have evolved over the last 2 and 3 years, they're starting to look a lot like they did in 2007, 2008.
So here's what I want to say. Here's what I want to say about
Starting to.
that.
starting
Fannie-
Just scratching
and they're
the surface.
pulling it back.
Fannie and Freddie, they're doing the right thing. Like they're doing the right thing by tightening right now. Here's the reality, though. I can write a loan today for someone that's self-employed based solely on stated income. Again, I
Yep.
can. I have that product.
It's possible.
I can do a self-employed client and not use any of their tax returns and just use their bank statements. They're available. So
Not zero down, though.
not zero down. That's the difference. So it's smart.
And it's not adjustable rate
Back in the day, you could do an
Interest
adjustable
only.
rate with 5% down, no income, no asset.
and interest only.
So what happened back in the day is
Negative
Well,
AM.
and
As
if
we
you're
got
able to look
closer-
at bank statements and they do have the income to support
who
it.
cares, right? It's
mean,
actually smart
they
lending.
have the income.
It's smart lending. What happened back in the day was as we got closer to the crash, things actually accelerated and got more dangerous. Now I'm seeing more smart lending. So I'm very happy with the landscape, and I like what's happening. But to your point, and everybody's point here, appreciation in the housing market is going to be very healthy, even through the recession, which we're going to go into, right? We're going into a recession.
small.
It's going to be
What they
you
call
know
it
why
in,
it's going to be small?
in that mortgage movie.
It's
the,
going to be small
it's a
because everyone
gully.
sees it coming.
Everybody sees it coming, and everybody saw what happened in 2008, and everybody thinks they're going to get a deal. Everybody's got all this cash waiting, and once a recession comes and they can get a deal, money's going to pour in.
Yeah.
Like that's what I think. People are waiting for the recession.
Yeah, money's going to
Like they want to get a deal.
I'm not sure. I mean, when that recession's coming though. I
2020.
mean, I don't know. I don't.
We might be in it right now. We don't know.
I
That's
don't
how it
think
works.
so.
Listen,
We're in
when people talk about predicting the recession and things like that, it's
Yeah.
like people talking about politics at a bar.
Well,
Like,
it's
I'm
also-
just like, listen, you're fucking blabbering. I don't even want to.
Right.
Whatever you say
You
is
don't know.
like what
You
you
don't
say,
know.
because tomorrow you're
Sounds
going to
like,
wake up and
let's
be
just
like,
do this.
wow,
Shut
that
up,
was
shut
fucking
up.
stupid.
We've
Well,
been hearing
because
about rates going to 6% since
Right.
2010.
And now they're going to be the
Yeah.
lowest they've ever been.
Every
You're never going to
economist,
see
for
a
the
rate
most part,
above
is
5.5%.
We're all
again.
fucking idiots. Nobody
Yeah.
predicted that, right? So, anyways, you never know. So we're running out of time, and I do want to get to our 3 questions. Every show we do 3 questions. They're totally random in my head.
Except for the first one.
Except for the first one. Thank you for clarifying that.
Every week.
Every week it's the same thing.
I mean, Jesus.
Yeah. So first question is, what scares John Hill?
That's a pretty common name. So this John Hill.
Yeah, this John Hill.
yeah,
What scares John Hill?
Mm-hmm.
Oh God, I think I would have to say, my daughter's not, being successful and being happy. That scares me.
Yeah, that's a good one.
That's a good one.
That's a very good one. Wow, that's a very.
Did not expect that from
Did
you.
not expect that from you at all.
Yeah, that's what happens when you have kids. is
Yeah,
that
it
you start.
changes everything.
That's true.
Yeah.
Next question is, if you could change one body part, what would it be and why?
On yourself.
On yourself.
I don't know. I guess my shoulder right now, because it's really not working all that good.
Well, it's because you worked out. Like, you think you're 14 again. And like, you're the 25 again. And like, you're like, oh, put it up weight. And then just blow out your shoulder because you're
I
88.
pick things up and put them down.
Yeah.
Wouldn't it be your liver?
It could be that. It could be. That's not a body part though. That's more
It's
of
a part of your body.
I guess. Yeah. So yeah, a liver too.
If you had to give an award for the person that has made the biggest impact in your life, if there's one award to give out, who would get that award?
Oh God, the one award for the person who's made the most impact in my life. It'd have to be, a split award between my mom and dad.
No, there's one.
One award. One award.
Yeah.
One award.
Mom.
Wow.
It's either mom or dad. There's only
Oh
one
God,
award.
that's
Well,
tough.
it's one award,
because,
but there could be multiple.
because one
recipients.
person's gonna be mad and the other person's gonna be mad, right?
Take your
So-
parents out of it. 'Cause
Take your
obviously,
parents out of it.
Take your parents out.
Most influential out of my parents, I would have to say the guy who brought me into this business. His name's Bernie Youngblood.
Bernie Youngblood.
Yeah, he was part owner of Title One, and one
still
of the
talk to
most. He
I
actually
feel like
passed
I've
away a
seen
few years
Bernard
ago.
Youngblood on some docs.
Yeah, he's
I don't know where or what.
different Bernard Youngblood. He
Was
passed
it-
away a few years ago, but was one of the greatest people I've ever met in this industry. He was just he owned Title One.
What did you get out of that relationship?
Oh, just
His
to be
life.
integrity.
Yeah.
Be kind to everybody. And the guy never had a bad thing to say about anybody. He treated everybody like they were his family.
So-
he was an amazing person.
So although you gave him the award, you don't follow his teachings.
I hope I do. I hope I do, because again, I mean, he was one of the greatest people that I've ever met. So, it would be him.
Well, John, I appreciate you coming on the show. Obviously, we've been friends for a long time, and I wish you the best. Tell the audience how they can get a hold of you if they want to talk to you about Credit Healthy.
Yeah, just go to the website at getcredithealthy.com, or you can email me at jhill@getcredithealthy.com.
Yeah, he responds to emails within like 48 to 72 hours.
Days, 48 to 72 days sometimes.
All right, everyone. Well, that is our show. Listen, I want to thank everybody for listening. Our audience is actually growing surprisingly, John. People actually listen to the show. It's really, really weird.
It's good.
Yeah. So if anybody wants to get a hold of us, go to irepodcast.com or email us at info@irepodcast.com.
What?
Is that
Yeah.
it's info, right?
Info, yeah.
Info.
I don't know. I'm going back on vacation. I'm already checked out.
Brad barely talked this show. He's been up north in a camper. His wife hates it. He's going all the way.
She's liking it now.
He's going to the UP. He's going down to Wisconsin. He's going back to Marquette, and he's coming back. I mean, and he's like stoked about this. And then he's like, I'm going to have to sell the camper after because my wife hates
And it does smell
No, she's
like,
liking it now.
on this side, it smells like bourbon. I don't know why.
That's probably just the polo.
He's sweating out. He's sweating out the
I can
alcohol.
see it in his
He's
eyes. They tell a story of a long night.
No, it was a long night, but not for that. Thunderstorms are crazy.
By the way, I think next week we've got Barry Habib on. I think, right? Is that
Barry's
next
a great
week?
dude.
Yeah, we're gonna have Barry.
Love
on, so.
Barry.
Love you guys. Happy anniversary to my wife if she listens. She never will, but I love you all. Bye.
Bye.